Rand, not such a good weekend, trading at R6.80 this morning, so a tiny bit more weakness coming through from Friday when we saw quite a bit of weakness as it followed that euro.
Morning, Stephen. Yes, absolutely. The Rand is still tracking the euro, and in this case tracking the euro lower. We saw the Rand start to weaken with a bit of intensity from Thursday after that disappointing manufacturing data locally, but then also accelerated towards the end of the week after the ECB's pronouncement that there could be an interest rate hike in that region as early as July, which seems to have caught some market participants a bit off guard. So with the euro's tracking weaker, the euro's trending weaker, and then the Rand seems to be following suit. And again this morning, with Asian markets having opened lower, softer commodity prices, definitely looks like the Rand is starting the week on the back foot, and we think that the trend is for continued Rand weakness rather than extended Rand strength at this point.
So would you expect the euro also to weaken in that case? Because as you pointed out, some of the risks there are still very much there. There's a bit of haggling going on about that Greek debt package. That's only going to be finalised next week as far as I know. And we also have the interest rate outlook in the Eurozone at this stage. Will they continue to weigh on the euro?
Certainly that is our view, Stephen. We've been saying for some time that as long as these sovereign debt crisis persist in the region without any firm conclusion to the issue, the euro will remain under pressure, and certainly that's what we've seen for the last week. So the earliest that we could expect to see a recovery meaningfully, of course, would be, as you mentioned, the week after, where their talks due to conclude and hopefully get a permanent solution or one that the market will have some confidence in.
Well, you mentioned that manufacturing number last week coming in quite a bit weaker than expected. This week there's not terribly much on the horizon. We were expecting consumer confidence numbers out tomorrow. They've been postponed until next Tuesday. We've got retail sales out on Wednesday. What would your expectation be for that, just given the slowdown we've seen in some other sectors?
Well, Stephen, as far as we'll just start with looking at Q2, we'd expect a moderation, a slowdown in consumer spending after a very strong Q1. Consumers are being squeezed on all sides, petrol prices and food prices rising quite strongly. So we would be expecting a moderation, certainly in consumer confidence, and we'd expect that to play into softer retail sales going forward for all of Q2. However, looking specifically at April, which is the data due out this week, we'd expect it to be one of the last few good months for retail sales. We've penciled in a figure of about 6% year on year, and that's above the consensus estimate of 5%. We're expecting some still favorable base effects in that month, as well as the effect of the public holidays and Easter holidays that fell in that month to have boosted sales, but we don't expect that to be a trend that will continue into the rest of the quarter.
Globally, it looks like industrial production numbers, one of the key data to look out for this week. China, the US and Europe all reporting industrial production. I should imagine that's going to give quite a key indicator of how the global economy is starting to slow down a little bit.
Well, absolutely, Stephen. What we've seen in the past few days is that global growth concerns do appear to be surging once again. And so the industrial production data that's out this week, specifically from China, as well as consumer inflation from China, could well play into shaping expectations of global growth. And of course, if those expectations are for moderation or quite a sharp slowdown in growth, we'd expect to see a spike in risk aversion, and then that, of course, would have a knock-on effect for the Rand. As I mentioned, the Rand has already started the week off on the back foot, and we see that weakening bias being firmly entrenched at this point. We think that if it breaks out of this current 666 to 682 range, then we'd most likely see the Rand break out to the upside, and then we could be headed for about 692 again.